right. What is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. We are getting a little bit of some price action today. Glasshopper, welcome in. Good afternoon to you as well. Yeshwanth, much love to you as well, as always. Dad87, I'm so glad you caught that swing failure pattern long today. I actually caught that as well. I posted about that in the Telegram. I did take a long from this swing failure pattern, but I also just posted in Telegram about a minute ago that I did TP some at the VWAP because this does so far look like a three-wave corrective move, and we might dump back down. We are setting up for a giga short. I agree, man. I think that this we are at key macro resistance, and it doesn't. We're still ranging. This was a break in market structure. It was only a wick, but it was a break in market structure. So we'll see. We could pop up to make one more high up into 98.5. But I'm looking for swing shorts. And I'm in the short still from up at this golden pocket rejection. Jaffiel, happy Friday to you as well. Much love to you. You shorted Solana. Solana's actually been pretty aggressively pushing up today. We broke the local highs from yesterday, actually from earlier today. But yeah, Solana, I am still short from higher up on Solana. Actually, it's around 146-ish. And I'm looking for that giga short on Solana as well. Let's see. And of course, guys, I love to stream. Thank you for being here. Tony CC, welcome in. Thank you so much for being here. Glad to see you in here. Diamond Palm, what's up, man? Great to see you as well. Rui Official, what's up, man? Welcome in. Vibes all day. Thank you for being here. Let's go. R Pink, what's up, man? Thank you for being here. Thank you for modding. Much love as always. Luciano, catch ya. Nice to see you, man. Divine, I was looking every pair of BTC in the exchanges. USD, Coinbase USD has a naked daily point of control place where the others hasn't. Yeah, Coinbase, I'm telling you, Coinbase volume levels are the levels to watch, guys. So pay attention to those. And welcome in, Luciano. AXSCB, welcome in. Brother Nature Joe. Guys, thank you all so much for being here. Aeon, welcome in as well. Let's just jump into it. Let's see here. And the bounce yesterday was from a naked daily point of control from Binance, Bybit, MEXC, and others. I tell you because you use Coinbase. Yeah, I do think Coinbase is the best level. Let's see. Did we have a naked daily point of control on Coinbase here down at these levels? No, we didn't, but I'll check Bitcoin real quick, or Binance real quick. Let's see. It was a little bit higher on Binance according to the PVP indicator, but yeah, pretty nice little trade we got going there. The swing failure pattern was definitely the swing failure pattern of those little range lows was definitely a better level to look at for the trade. But awesome, man. What's the Telegram? Okay, Aeon. The Telegram link is in the description of the video. And I guess while we're here, I'll just go through this real quick, guys. The main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description, you can get up to $8,100 in futures trading bonuses. You'll get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts on trading fees if you deposit some of the larger amounts into the exchange. They are also offering some of the best initial deposit bonuses in the entire industry. For instance, if you deposit just $100, you can get a 50% deposit bonus, which is the highest I've seen from any exchange for $100. And then they're offering 20% deposit bonuses up to $5,000 and 10% deposit bonuses up to from $5,000 to $20,000. So if you're interested, R Pink just posted a link. Thank you, R Pink, for doing that. Now, once you've signed up with BYDFI and deposited $100 into the exchange, that $100 is your money to trade with. You will get the discounts on the trading fees, and you can get the 50% deposit bonus if you KYC. You click the Telegram link that R Pink just posted in the chat or in the description of this video. And once you're in the Telegram, you type in /verify in your user ID, which will be right up here. It's probably going to be a string of letters and numbers for you guys. But once you do that, you're in the community. It is a private community, but all you have to do is join BYDFI under my affiliate link, deposit $100, and then you're in the Telegram for life. So thank you guys. Telegram link in the description. Also, really quickly, we have a couple other partners of the channel. NAMI Trading. NAMI is this momentum and money flow indicator down below here, down below Market Cipher B. I use it for all my confirmations on trades. I'm looking for bull divs. I'm looking for bear divs. I'm looking at money flow. For me, it's a confirmation once I get to my levels of interest. It has been a great tool to help me maximize my profits. I have partnered with NAMI Trading to get you guys 50% off. If you do want to get NAMI, use the affiliate link in the description below and use the discount code DIVINE50, and that'll get you 50% off of NAMI. Lastly, we have MEXC and Bybit, both two other great exchanges offering some discounts on trading fees. Bybit's offering up to $30,000 in futures trading bonuses, and MEXC is offering a 10% initial deposit bonus, I think up to $1,000. Okay, let's see here. Chad P, welcome in as well, man. Good to see you in here. So guys, yesterday we were looking at a couple different little scalp long opportunities. We were looking at the 1-to-1 Fibonacci extinction. Now I'm going to point this out because we now have a pretty clear 5-wave structure to the downside, but we were also looking at this 1.236 Fibonacci extinction down here. And we were looking at that because it was in confluence with this liquidity grab, and we did have a naked daily point of control at around 97 or 94,370. So we did hit that naked daily. Actually, yeah, there was a naked daily point of control there. We did hit that naked daily at 94,370. We had that marked out on the chart yesterday. Naked daily point of control, 1.236 swing failure pattern. And we are seeing a bounce from that liquidity grab. Guys, we're still below the value area low of this micro range that we've been in for about a day. And we are at the macro resistance area. So let me go ahead and just hide this little range. I did put this channel on the chart. So this descending channel, it's just pulled. Anytime you see a pullback like this in it, you could grab a descending channel from the high to the higher low, and then to the first initial low, and that's going to give you channel. You could even go with this low right here, and you can see how well the channel's respected. But let me just say this: descending channels have a higher probability to break to the upside. And if it does break to the upside, we can sweep the liquidity that is built up. At least you oftentimes will sweep the liquidity to the second pivot, but most of the time you sweep the liquidity to the second pivot. Sometimes you sweep all the liquidity of the entire channel. So if we are to break out of this channel, I do think we would come up to 98.5K. The one thing that I do have to say about this so far is we could look at this as a 5-wave impulse, a wave 1, wave 2, wave 3, wave 4, and then a wave 5 here. So after your 5-wave impulse ends, if we're going to see a larger ABC correction, first of all, we're at macro resistance. We're going into the weekend. This could be all of our A wave. We could see a B wave retrace up to near that golden pocket 786 area. And then we could see one more C wave and an impulse to the downside to make a larger corrective move before attempting another run at the highs. And that would just be a bigger range. We could be forming a bigger range. The fact that we do see kind of this contracting diagonal or channel to the downside in 5 waves is a bit concerning if you're a bull. Zooming out to the 4-hour chart, we are rejecting from, let me go ahead and just hide this channel real quick now. We are rejecting from a very, very key level of resistance. And guys, we've been talking about this level of resistance for quite some time. It's our macro range point of control in confluence with that anchored VWAP from the all-time highs. Now, the reason why the anchored VWAP is so important, guys, because we've been in a macro downtrend since the all-time high, a more macro downtrend. Actually, let me just zoom out to the daily. And anytime you are in a downtrend or an uptrend, let me give you an example of this. Let's throw on the anchored VWAP from 74K. And you come to that anchored VWAP. Now, on Coinbase, we didn't quite touch it, but on Bybit, you did touch that anchored VWAP here. But if you want to maintain your overall trend and have the volume supporting the overall trend, which was bullish market structure, then if you come down to that anchored VWAP, you want it to hold. And if it does, you'll continue pushing up. A good example of that is on Ethereum. When Ethereum had its anchored VWAP from the $1,400 lows, we broke through our lower pitchfork band, broke up. We were ranging right around the midline, but then we lost the range and we came down to that anchored VWAP. Because it held, we expected to break the range highs and even continue up further, possibly to the upside. And that's what happened. So anchored VWAPs are very, very important macro volume levels of support. And now if you have a bearish anchored VWAP, like pulled from an all-time high, you oftentimes, you can wick above it, but it will act as sort of a rejection point if the bearish trend is going to continue. And so if we go back to Bitcoin here and we look at Bitcoin's anchored VWAP from the all-time high, you can see we lost it October 10th. We back tested it, rejected, tried to get above it. We failed. A little bit of a low time frame failed auction in here. And then you just dump. Now, we've been away from that anchored VWAP for quite some time. So we're seeing a larger, what could be three-wave corrective move to backtest that anchored VWAP and the point of control of the range. And remember, we were looking to come up to the point of control of the range because we held the value area low. And if we do reject from this area, this is a major rejection area where we could see big volatility to the downside, even to come take out your 80K lows. And so the title of the video today was Bitcoin is at a key decision point. And this decision point could last about a week or even 2 weeks. We could form a range around here for a bit and continue range, especially knowing we're going into the weekend. But if we do, you can see on the daily chart, we didn't even close. I guess we closed the daily candle right above the POC, but lost it immediately with a bearish candle. I don't want to say bearish engulfing because it didn't engulf it all the way. But if we do reject here, guys, that's going to be bad news. And we can pull that other range volume profile. So this is our macro range for all of 2025's price action. But if we pull our smaller 9-week long range, our range that goes back from November 21st. And so let's go ahead and turn on that range. If we fall back inside of this volume profile, and let me go ahead and hide the bigger volume profile for a second so that we don't get confused here. If we fall back underneath the value area high of this range, what this would be is it would definitely confirm to me with high probability that this was a corrective move to the upside before coming down significantly, losing the lows of the channel, the channel trend, which is this up, sideways and uptrend. And it's likely that we would probably see some bounces, back tests, and then we could probably dump. But it would be likely that we would come take out our 80K lows in time. It wouldn't happen right away. It wouldn't be, we would see bounces and scalp long opportunities along the way. But if we reject here, guys, it could determine the next few months for Bitcoin is going to be bearish, where we could come down and make some lows and maybe form sort of an accumulation, like we're looking for accumulation on a lot of the altcoins. We could come down, hit that 78K support, 78 to 77K support, come up, form some sort of range in here, that kind of rounded bottom that we like to see, or accumulation pattern that we like to see. Let me get a drink of water real quick, guys. I'm sorry about that. Okay, sorry. All right. So yeah, I think this weekly candle close this week is going to be hyper important. Another thing to look at on the daily time frame, this candle right here, this volume imbalance candle right there is a big fair value gap on the daily. So if we don't really hold the support that we're kind of at right now, and we start to enter that fair value gap, we could see a quick flush down, a very quick flush down to backtest that point of control right around 93K. Excuse me, not point of control, value area high, right around 93K. Now, because we are still above our 9-week long range point of control, it should act as support. If we do come down to that level, it's going to be a bullish backtest of the breakout of this range. And we would want to, if you're a bull, you would want to see a bounce from that area. If you do see a bounce, we can at least at the very minimum expect a retrace up to the golden pocket, pulled from the highs to the lows. But you might even come up and make one more high into this range and then kind of create a bigger sideways range between the anchored VWAP and your breakout range value area high. And that could last a couple weeks. So we'll see how this plays out and develops over the next weeks. But locally, I'm looking at bigger, I guess, swing to day trade shorts from this general area of resistance. And I'm looking at scalp longs to play as a hedge, I guess. And I'm still in the long, by the way, from 91K. That long is 85% out. And actually, the long that I took today was a compound of that long position that was already open. So my average price is probably close up to 93K now. All right, let me check the chat here. You cleaned up your fibs a bit. You watched the tutorial video for the fibs. Awesome, man. Well, I hope that video helped. I kind of went in depth on how I use the golden pocket Fibonacci there and just fibs in general. So glad, I never realized how I could use my arrow keys to move it. Yeah, for me, because when you pull a fib and you want to be precise, right? So if we're pulling a fib from the lows, and I use my magnet always, from the lows, and you snap it on that low, you bring it to the high. Now I want to bring it over, and I'm just going to use the arrow to shift it over so that I make sure the arrow pad on my keyboard to make sure it stays in the same spot. Because you could try to go like this and drag it across, but you might move a little bit. At least me, I'm not very good at dragging it straight across. So that I just use the keys. It's just a little trick I use. All right, let's see. And the R Pink, you are braver than I am. I could never try and pronounce everyone's name. Yeah, well, thank you, R Pink. I appreciate that, dude. It is tough, you guys. You guys see how much I butcher names in here, and if I do butcher your name, it's never a slight against you, or I'm not trying to be mean or anything like that. I just suck at pronouncing names. Okay. Did you also take in consideration single prints in your confluence? No, I wasn't looking at the single prints. Really, the only thing that I did to confirm that was the swing failure pattern, the pierce below the level and the rise above the level. Now, hitting the naked daily point of control in the process and finding naked daily point of control support was a big help. Like, it gave me more confidence. But really what I was looking for was, as soon as we pierced this low at 94,518, we hit the naked daily at 94,370, and then we reclaimed 94.5. As soon as we reclaimed it, I longed, and that's kind of the trigger with a swing failure pattern. But look at this, guys. I also will say this. In a bearish day, in a bearish trending day, the VWAP will often act as resistance, and we are starting to reject from the VWAP now. So there is a possibility we could come down and make new lows, and we could really break this thing down. If we're looking at this being a 5-wave move, 1, 2, 3, 4, 5, then we can look at this. So where do we retrace to on our wave 2? We retrace to the golden pocket. That's your most common target for a wave 2 retrace. So we retrace there. That's actually where I shorted right there a couple days. Was that yesterday? And then see, we saw a bigger push down in a wave 3, although it didn't go near as far as we wanted it to, right? This little wave 3, and in a contracting diagonal, it doesn't, but usually your common target is the 1.618. So that is way lower. So that's why initially at first I was looking at this as a potential 3-wave A, B, C correction, and then we could, make another attempt for the highs. But we got this bit of consolidation that happened all day yesterday after the stream. And if we are still looking at this, though, as a third wave, maybe, a shortened third wave, then we look at our wave 4 targets between the 382 and the 0.5 Fibonacci. We didn't even really make it up to the 382 Fibonacci. So a little bit, there is a problem with counting this as a 5-wave impulse to the downside. Your wave 3 didn't really extend to where you wanted to. Your wave 4 didn't really retrace up to where you wanted to. And so when we don't have a clear Elliott wave count like that, and we also see very clear on the hourly structure, 5 waves, five waves up and down, I say, you know what? I'm just going to look at the trend, and the trend is that channel. That's when we can make that parallel channel. We're trading within the channel. And for me, this can continue to kind of grind sideways and down within this channel. If we start to break out of this channel, then, we might look to even take the highs, or at least once again, come up to the golden pocket, pulled from the high to the low of the channel, which would be around 96.5 to 96.6. I believe we have some other confluence there. Let me see. Was that naked daily point of control there? No, it's not. Okay. Get rid of that. I want to just make sure this naked daily is fresh. Okay, that's today's naked daily. I marked that out already. I guess I shouldn't have that marked out quite yet. The daily candle hasn't closed, but that's where that naked daily is there. Okay, turn that off. Yeah, also, we also closed the CME gap. That's another good, point that we made. We did have a CME gap down here, guys, into about 94K, and we did close that CME gap. If we do look at the CME chart here. CME gap, you can see that CME gap was closed. And so now, sometimes after you close the CME gap, you'll see a bit of a move up. In this case, a move up. Olafray, welcome in, man. Good to see you in here. Quiles, good to see you as well. Okay, take your time. Good evening. And Michael Mitzal, good evening to you as well. Guys, it's Friday. We are getting towards the weekend and market close. So remember what I said about last Friday's live stream. I said Saturdays are so boring. You know, go take some time away from the charts, because look at this was last Saturday. Like, boring as crap. And so we're seeing a bit of a move down. We're changing market structure by breaking that low just a little bit, you know, whether you want to consider the wick changing market structure. In this case, I do. And because we're changing market structure, we can now look for a lower high as a greater possibility, not a guaranteed, but a greater possibility. So lower low, lower high, and then we might be able to continue this push down. And that also works in confluence with that ABC correction. If we're going to see a larger ABC correction to the downside, then you would expect that lower high before making another lower low. But it's going to probably be boring, and we're probably going to continue to range. Like I said earlier in yesterday's stream, it's likely that we're forming a sideways range up near our macro resistance. And this sideways range for now, this is kind of our range between the 94,000 lows and, 98,000 highs. Now, if we start to break down again, it could drop all the way to 93, and we could form that larger range in here. So we'll see how that plays out. But I would expect over the weekend, we're going to kind of continue to range. We might continue to kind of bleed down to back test some levels if we don't hold this support level. But I am in the scalp long. I am in the short. I played it first as a scalp, but it could turn into a swing. And I'm also looking to compound that if we do see a lower high come in. Okay, you definitely did, even though I know fibs. It was a great refresher. Awesome, man. Well, I'm super helpful, and your custom settings are helpful. Awesome. Well, thank you, Tony. I'm glad that helped. I think what a lot of people don't understand with the Fibonacci is when you're using the logarithmic chart, if you're seeing more than a 100% pump to the upside, you want to change your fib levels based off log scale. And you guys see me do that a lot in the live streams. And if it's more than a 30% dump, you want to change it to based off log scale. And that'll give you your proper 61.8% retrace. Now, let's just give a good example of that. Let's go onto Ethereum. On Ethereum, and I'm going to zoom out to the daily time frame. A lot of people don't know that non-log scale. So when we do drop, like if we were looking at the Fibonacci golden pocket pulled from the, let's see, where was it? The lows to the highs. Actually, it wasn't that one. The big one. Okay. So from the $1,400 lows to the new all-time high, you can see we bounced straight from the non-log golden pocket, which was also at our pitchfork midline at 2750 pretty much. But this is more than a 100% pump to the upside. So the technical proper retrace is 250%. So the proper technical retrace is around 3,200, 32 to 3,100 down here. And that'll give you your proper 61.8% retrace. But the non-log fibs still do work because a lot of people do use them, and it's kind of like a self-fulfilling prophecy. They don't have it on log scale. They just keep it on regular. And then, sure enough, they long that level because it's a level of support. Okay. I'll go through the videos so we can keep going. Yeah. Okay, cool. Yep. So log scale, guys, when you're seeing heavy fluctuations in volatility of a coin, that's when you turn it to log scale, and it's going to give you a better representation of like the returns and the way the price action is moving in percentages. So especially on some of these altcoins that will pump like 1,000% because they're low liquidity and they're just getting started, log scale will really help you determine the proper TA. But honestly, guys, there's not a lot to update on from yesterday's live stream. We are still at that macro resistance. Now, I will say this. Let me zoom in here onto the hourly chart again. And you can see we're pretty much chopping right around both of our channel midlines. So it's our smaller descending channel started from yesterday's high or Wednesday's high. The last 2 days, we have this descending channel that's forming. But our bigger channel is our blue ascending channel. And this channel is still important. This is kind of our corrective and sideways and up move. And if we start to lose this channel, you could see the midline held prior when we broke above it, immediate low time frame backtest. So break above, immediate low time frame backtest. Because it holds, you expect to make new highs, and we did. Now, if we come down here for a higher time frame backtest, yes, you might see a little wickage past it. If we backtest this and it holds, then you could see the continuation, and we could even continue up to the top of the channel around 102K. I would say that 50-week moving average at 101K is going to be more important than the top of the channel. But if we start to lose this and close the daily candle below this midline, it confirms that we could be coming lower. Let me zoom out to the 8-hour chart, and I just want to look. Yeah, so no bear divs still on the 8-hour. That money flow is finally starting to roll over. And same on NAMI. Now, NAMI has very slight money flow bear divs, but no momentum bear divs. I will say this, though, and I talked about this yesterday in the live stream, that if we closed our daily candle yesterday red, or even like not a bearish engulfing, but just a pretty big red candle, then it would have Market Cipher B roll over and pretty much confirm the bear divs on the daily. And remember, yesterday I said NAMI's already done it. NAMI already rolled over. NAMI already confirmed the bear divs on the daily, and money flow has been draining out here. So now we are seeing Market Cipher B catch up, and we are confirming those slight bear divs on the daily time frame. If today's daily candle closes red again, it will absolutely confirm them, and the money flow might start to top out and roll over. And if we get that money flow topping out and rolling over, and bear divs and money flow bear divs, that's the prime setup I look for. So one of my trade setups with both of these indicators together that hits, gosh, it hits over 80% of the time, is when Market Cipher B has momentum bearish divs and the money flow is topping out and starting to roll over. Then I go down to NAMI, which is quicker, and NAMI has the bear divs on momentum and the bear divs on money flow. Then that setup for me hits a majority of the time. And so that's a really, really great confirmation to look for it. Now, because we're on the daily time frame, that means we could get a much bigger pullback on the daily. And even if we're going to make a higher low and continue kind of grinding sideways and up, it could mean a week or so of some downside where we could get some nice shorts in. Tony Box, good morning, man. Good morning to you from Australia. Dude, that's awesome. You're all the way out in Australia. I think it's great that technology has allowed us to connect from all over the world. Different times, different locations. It's great. All right. Crypto OG Havoca, welcome in. And the guy in a hat. I love that, man. The guy in a hat. That's so awesome. I think the subwave 5 of 4 is ending as we speak, and then we go up again in a wave 5. No, I think what you're talking about, let me zoom out to the 4-hour chart. So you're looking at a bigger 5-wave impulse to the upside. And I think you're looking at this structure right here, like this being a wave 1, a wave 2, a wave 3. No, okay, not that. You must be looking at from this low here, wave 1, wave 2, wave 3, wave 4, and then a wave 5 here. Yeah, it could be ending. And initially I said that this move was over, but if we even zoom in more, remember I longed right here. I longed the 91K swing failure pattern right here. No, excuse me, right here. The SFP of the lows, those very internal lows. But if we zoom in onto the 1 hour chart and we look at this structure from taking out the weekend lows, remember this low right here was a Sunday low. So we came and took out 90K, that Sunday low, weekend low, took it out on Monday when markets opened on Monday. So from that low, we can see a very clear 1, 2, 3, 4, 5. Now, that could be part of our bigger 5-wave impulse to the upside where we're looking at a 1, 2, 3, 4, 5 within this last little leg here. So, yes, it is still a possibility. Let's pull our Fibonacci targets then. This is a little bit complex, though, because if we're looking at this as a wave 1, and then we're looking at all of this as a pullback in a wave 2, and then this is our wave 3, 4, 5, you got to look in this little structure for a wave 1 because this looks far more 3-wave corrective, and you want to start your impulse in a wave 1 with 5 waves. And then also the pullback. You got that weekend Saturday range, and then you kind of got all this flat that's going on here. And then you start to pump. So it's a bit messy as far as the Elliott wave count goes. I don't like that. There's some real big problems with that at the start of it. But let's just theorize and bring it on the chart as a possibility. So we'd go from the lows of 3 to the highs of 3. You want to bounce between the 382 and the 0.5 Fibonacci. And yeah, we are in that zone bouncing. Let me just do this. Let's pull it to this low. Yeah, it's interesting. I mean, we could be crypto guy in a hat, excuse me. And your wave 2, good point, Michael Mitzal. The wave 2 is quite long. And guys, your wave 2, if your wave 1 is really quick, and your wave 2 is like 6 times longer than your wave 1, it's a very low probability that's actually a wave 1 and a wave 2. You really don't want your wave 2 to be 4 times longer than your wave 1. So let me just throw an example on here. If we have our wave 1, wave 2 retraces to the golden pocket, wave 3 is your strongest, longest, most volume filled a majority of the time. Your wave 4 is generally more shallow and longer in time or comparable in time to your wave 2. And then you get your wave 5 finishing that impulse. If you have a big, quick wave 1 like this and your wave 2 goes forever, 6 times, 7 times as long, and then you start to push up in here, it just makes it less probable that they're connected. And then you would have to kind of look at, you'd have to zoom in on lower time frames and look at maybe smaller structures within it, corrective structures within it or complex corrective structures. So that is a good point, Michael. All I know is that we're bouncing from the support level that we were looking at because of the swing failure pattern, because of the naked daily point of control, and we're trying to get back above the midline, and we're trying to get back above our VWAP. If we do reject from this VWAP right now, then it is going to give me a little bit of a bias that we are going to continue grinding to the downside. Also, the way we moved up here, nice 3-wave corrective move. Now, are we going to come hit the golden pocket right now? Because if you hit the golden pocket, let's just do this little, now this is 5-minute time frame. So this is really pushing it as far as Elliott waves go. But we'll go from the lows of wave 3 to the highs of wave 3. And if we hit our golden pocket, which we now have, oh no, we haven't. We're barely front running it. But if you hit that golden pocket, now it invalidates this as a 1, 2, 3, 4, 5. You can't say it's a 4 if you hit the golden pocket. You want to stop between the 382 and the 0.5. You can even wick past the 0.5. You just cannot hit the 618. Now, could we look at this a little bit differently? Another bullish scenario is, yes, we're grabbing liquidity from the bottom of the range, and we're about to see what's called a double 1-2 impulse. So a wave 1, wave 2, internal 1, internal 2. Then we would want to see a 3. Our 3 would push us up pretty aggressively, and then you could get your 4, 5, 4, 5. If you have 2 1-2s, you expect 2 4 5s. So, and then you get that big explosive third wave in the middle. So we wouldn't want to see it break up. Well, we could continue kind of grinding down here until we hit that golden pocket. But from this golden pocket touch, you would want to see a pretty aggressive move to the upside. And it's to me, it's less likely we're going to see a wave 3 to the upside going into the weekend, going into Friday market close and Saturday price action. Yes, and also a hard invalidation is we do have the overlap of the 2 and 4, right? So if your wave 1 highs, your wave 4 overlaps those highs. If you have overlap here, now that's it been invalidated. So we can already say without even hitting the golden pocket, it's been invalidated. Now the only way to count this 5-minute structure would be as a double 1-2, a 1-2, 1-2, and then we could even get another 1-2 in here. You could have a bunch of 1-2s. You can kind of form that channel with a bunch of 1-2s, and then you explode up, and then you get your 4-5s, 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 in sort of another channel again. So good point, man. Good point there. But honestly, guys, we're just chopping around. We're just chopping around here. And at support, we did get the liquidity grab. Because we did grab that liquidity, though, technically we have broken market structure bearishly. Even though it was just a wick, to me, it's considered a bearish break in market structure. We also need to watch, we're at this macro resistance, right, of the anchored VWAP from the all-time high and of our large range point of control. So is this going to be a topping reversal pattern? Whether you want to say left shoulder, head, and then we're going to come up right shoulder and then start to break this thing down, kind of seeing that head and shoulders, or you could say a mini Model 2 Wyckoff distribution could occur, like an intraday or intra-week distribution in here, and then you break it down. But I expect a range to form. Like I said yesterday during the live stream, I expect a range to form around this more macro resistance. And then this decision point that I was talking about in the title today for Bitcoin could last about a week or even 2 weeks of making this decision. But make no mistake, this is a very, very crucial decision for Bitcoin. In the bullish case scenario, we flip that point of control to support. We flip this anchored VWAP to support. Man, we could make a pretty aggressive move to the upside. We could make an aggressive move. Let me just turn off this smaller volume profile. We'll turn on our larger volume profile. And if we can flip that macro range POC to support, we might be able to move all the way up to your value area high, which is in confluence with the non-log golden pocket. If we pull that golden pocket, you can see perfect confluence there. 110K, 110.2. But because this is a 36% drop to the downside, 36% drop here, you really do want to get your proper retrace, put this on log scale, and then you're going to see now that it drops to about 108K, to 106.3 to 107.9. Let's just say that. And you have a very, very key liquidity level resting in that golden pocket. Just something interesting to keep in mind, guys. I will be paying attention to both golden pockets, though. And then, of course, we have our 50-week moving average. Let's see. I threw that off there. Coming in at the top of the channel, that 50-week moving average is around 101.4 right now. And for me, that moving average is going to be really important. And if you guys do remember, I talked about this the other day. We have that fractal. Let me see, where did that go? All right, well, I don't see. It's very interesting on the Bybit chart, Bybit perpetual chart, guys, USD perpetuals. Our anchored VWAP from the all-time high is quite a bit higher. It's in perfect confluence with that 50-week moving average. So if we start to close the daily candle above the point of control of the range, I do think we will see a move up there. This decision point we're going to be making is very crucial. Point of controls. Let's just pull it to there. Yeah, point of controls right around where we're at. So we'd want to see the weekly candle close above 96.3. Now on Coinbase, it's about 96.6. So I would want to see it really close above 96,575, let's say. I would want to see it close above that. Let's check out our order flow. Let me just come in here. Let's check out our order flow here. So what was interesting, and we got this move up with the liquidations perfectly earlier today, because you can see what was happening here on the charts earlier today is we had those shorts come in from the rejection of the VWAP, and those were fresh short positions that were coming in. So you can see CVD is almost straight down. That means most of the market orders were short market orders. And you can see your open interest was increasing for most of that. So we had a lot of fresh shorts rejecting and coming down to make new lows. And we did, we did come down and we took the liquidity of the low. And after that, you can see now what happened is we're getting our open interest dropping here. A lot of people got stopped out. First of all, on the liquidity grab, we saw some longers get stopped out. But now we're moving up here, and you can see as we're moving up in this zigzag pattern, open interest is dropping steadily here. And open interest is just positions opening or closing. So we are having positions close right now on the market. Let me reset this so I can get my CBD back. Yeah, and our CVD is relatively flat. I mean, we did have some long stepping in towards the beginning of the move, just like one of those was me longing the swing failure pattern, right? So we had some long step in on the swing failure pattern trade. But largely, as we're kind of pushing up in this whole area here in the last few hours, we're dropping very slightly in open interest, and our CVD is flat. I mean, nothing happening really. As far as our overall bullish CVD divergence that I talked about yesterday, bullish CVD absorption that I talked about yesterday, it is still intact. But remember what I said, and guys, I will prove this to you in time. If you keep tuning into these live streams, in time I will prove this to you, how much this does work. Let me zoom out to the hourly. And where did that go? Come on. Wow, actually, look at this drop we've seen in open interest here for the past few days. So we're not even really making bullish CVD absorption. I mean, I guess it's still technically a higher low here, or increasing open interest from this low to this low here, still increasing. But, you can see pretty clearly from the Monday lows, the liquidity grab from the weekend, we've been pushing up, making higher lows in the price action. We've been making lower lows in the CVD. Now your open interest is all over the place. When you want to see a steady rise in open interest, but we're not seeing that. We're seeing this nice steady rise followed by a big prolonged drop, another nice steady rise followed by an even bigger, more aggressive prolonged drop. So when you see these in there, it tends to invalidate the bullish CVD absorption. I have seen that in the past. I've pointed that out to you guys many times, and I will continue to point this out to you to show you that, yes, even though technically it is still bullish CVD absorption, it is far less likely to play out when you have these prolonged drops of open interest. Okay, let me check the chat here. And actually, we'll check liquidity real quick too. 24 hours. So we do have some liquidity coming up into about 96,500. I want to check our Model 3 real quick. Yeah, about 96,500 is where we have some liquidity. If we pull our current golden pocket right up into that area, 96.5, 96.6. So be aware now that we've broken that market structure, you could get that lower high before making another lower low. And that would be taking out all that local liquidity above us. But because we broke this low, we have now changed market structure. Even though it's only a wick, I count it. Okay, down we go now, 3-5. A third wave and a fifth wave. Yeah, I see what you mean. So maybe this all is a wave one in a contracting diagonal or kind of a parallel channel. And then you have a wave two retrace to a lower high and then a wave three. TXRX, welcome in, man. Good to see you in here. Market flow is not a method that I've learned or looked into yet. Tony C, order flow, excuse me, is very, very awesome to use. Like it is, especially CVD divergences. CVD absorption is the best. Now, let me just give you guys an example of what bullish CVD absorption is. So you can actually see from our lows at, what is that, $84,400 right in, let me just grab a vertical line. Where is it at? There we go. 84.4. So we'll just throw it right here. And you want to look at where your CVD is at. So let's now grab a horizontal line. So your CVD is right here at that low, right? We're below it. So it is decreasing overall. Now it's a mess. You got a lot of chop in here, but technically our CVD is making lower lows from this low. And our price action is making higher lows, right? CVD is slightly making lower lows. Your open interest is increasing. It was increasing steadily. I would say, even though we have ebbs and flows within here, the overall structure was increasing. Now, this big drop is what concerns me about the bullish absorption actually playing out. And even like this drop here is concerning to see. You would want to see this open interest, even if you have the little ebbs and flows in here, you'd want to kind of see it keep going. Even if it's going to lessen the trend and like kind of flatten out a little bit, you'd still want to see it keep going steadily to the upside. But what you consider bullish CVD absorption is when you're making higher lows on the price action, you're making lower lows on the CVD, and your open interest is increasing. Because in order to have absorption, what absorption is there's whales that are absorbing all the short positions. If the CVD is going down, that means market shorts are coming in. But you want those to be new money, not if your open interest is dropping, it's positions getting liquidated or stopped out. You want your open interest increasing, meaning it's new money that's coming in that's shorting the market. So if we have people constantly shorting the market, but we're not able to make lower lows, that means there's some sort of big whale down here. I don't even know how to draw a whale, like big ass whale down here that is absorbing those short positions, and it's going to be used as fuel to push to the upside, absorbing all those shorts. And then once you get that short squeeze start, it's fuel to be used to the upside. So, that is bullish CVD absorption. Now, bearish CVD absorption is pretty much the opposite. Your price action is making lower highs. Your CVD is making higher highs, and your open interest, you still want to be increasing steadily. But order flow is absolutely incredible to use. CVD absorption plays out, I would say, 80% of the time or more. But I'm guessing since we're starting to turn down now, it's likely longs that are closing, preparing. So you can look actually at your order flow to see if it's longs or shorts that are closing out. So let's go to that 5-minute chart again. Let me just refresh this. And if we look at the last, hour, 2 hours or so, and I wish this wasn't as flat because I could give you a better example, but you can see our open interest is dropping, meaning positions are closing out. Over the past hour or so, positions have been closing out. Hour, 2 hours. Positions have been closing out. Now, at first, let's see, pretty much right where it starts going flat here. Now, if this was going down more, you would say it is, because when you get a short position that closes out, it's a market buy, essentially. When you're forced to close a short, it's a market buy. When you're forced to close a long, it's a sell. It's a market sell. So if you're forced to close a long, then and open interest is dropping, but CVD is rising, that means it is long positions closing out. Short positions closing out, which is a market buy. So your CVD would be rising, but your open interest is dropping. So this, actually, what we're seeing right now is not a really good example because we're kind of flat in here. But just think of it in terms of like just buying and selling. If you're seeing the CVD rise, let's just say, let me see if I can find a good example of this. Okay, where yeah, okay, you could say, look at right here. We have some long positions stepping in, right? CVD is increasing here. Long positions are stepping in, and our price action is moving to the upside. But your open interest is severely dropping here. So it's not new long positions that are coming into the market that are pushing the price up here. It is shorts getting stopped out, which is a market buy. That's why this is rising, because shorts are closing their positions. We know they're closing their positions because open interest is dropping. And we know it's not new longs because open interest is dropping. If it was new longs, open interest would be increasing. And the CVD is going up here because a forced close of a short is a buy. So that's kind of a good example of that. Okay, is it likely longs are closing, preparing for more downside? I mean, right now our CVD is really flat, and even your open interest is just kind of slightly steadily dropping. It's a mixture. Right now it's a mixture of longs and shorts that are kind of closing out. We're going into the weekend, so a lot of people are probably closing down their scalp trades for the weekend. Diamond Palm, thank you so much for joining the Telegram, man. I appreciate that. And welcome in. I hope you like it. Remember, guys, in the Telegram, we have that general tab where you can ask questions. And if you tag me, tag me, then I'll more likely see that question. So please do that. Solana, Nami, 6-hour momentum breakout. I've seen false prophet use this as a bullish sign. Okay, let's go check out Solana. 6-hour momentum breakout. Okay, 6-hour. And I think he's looking at like a trend line in here. Maybe he's looking at this momentum. And so, yeah, you're breaking your momentum waves. Kind of like when you break a channel, you would expect for this momentum to keep going here. Yeah, I mean, it is breaking out there. And we are still testing. This is your large, like almost 2-year long range point of control here. Let me just pull this all away. But I would just still be careful. Now, remember, we're still looking at Solana from the lows of this. We're looking at this whole entire sideways range being a possible accumulation range. From the lows of the range, we have a very clear 1, 2. You can even say internal 1, internal 2. Here's your big third wave. Then we had our 4 that pulled right down to the 0.5 Fibonacci. Then we have a 5 in here. So yes, we could see one more 4 and then one more 5 to end this because you have 2 1 2s in here. So you would need 2 4 5s up here. So yeah, we could make another high here and break up to new highs. But remember, Jawfield, we're at this very key macro resistance. The liquidity grab of the range highs into your golden pocket. So be very careful because 150, 148, 150-ish, very big resistance area where, and especially if we're going to continue to form that accumulation, like a tap 1 here, tap 2 here, break, take the liquidity of the highs of the range, reject from the golden pocket. We could come all the way down to the 786 in the value area low for a tap 3, and that could give you your bottoming reversal pattern, whether you want to call that an inverse head and shoulders or just a Model 2 Wyckoff accumulation. But, like I said yesterday in the stream, we have a lot of confluence of support here around between 125 and 123. And I will for sure be longing down here if we get down here. Yeah, Tony C, it's really helpful to look or to use that order flow. And by the way, this website here is coinalyze.net. It's free to use. So You know, some people will pay for order flow like Atos or ExoCharts, Market Monkey, but you can get everything you need for free here. And if you only use, like I only use the order flow to look at CVD divergences. So it's like I don't want to pay a bunch of money for ExoCharts when I could do the same thing here. So coinalyze.net, it's a really awesome tool to use. Okay, order flow, yeah. I love the way you set up the screen with OI and CVD. Yeah, I love that too, Michael. To me, it's simple, right? It's a simple setup. You can look really easy here, simple setup. You know, and I do have my stochastic RSI down here. You know, sometimes I will look for bear divs or bull divs on the stochastic RSI. But for the most part, I'm just looking at these three. You know, price action always, of course, and then CVD and open interest. Now, I also use aggregated open interest because aggregated open interest takes all the major exchanges into account. So instead of looking at just one, like Bybit itself, the open interest just for Bybit, you get a more balanced view of what the market's doing as far as opening or closing positions. Solana starting to reject at the naked daily point of control. Okay, let me check. Let's get back to Solana. So let's turn on our naked daily points of controls. Yeah, we are at a naked. Yes, we're coming up to a naked daily now. So we have a couple naked daily points of controls, and let me zoom in onto the hourly chart, and I'll turn those on for you guys. So yep, we just hit it from yesterday. Our naked daily point of control from yesterday. We're coming up and hitting that right now. We do have one at 147.16. Let me see here. We are starting to form some bear divs on Market Cipher B. If we roll over right now and reject, it'll be 15-minute bear divs. You can see we do have some local bear divs here on NAMI. Just in this little move up, higher highs, lower highs here. Money flow looks pretty bullish though on the 15-minute, and on Market Cipher B, it is starting to cross over into the green. Let's check our 5-minute out. Let's see if we're going to reject from this area. Yeah, 5-minute bear divs confirmed, but money flow looks strong. You see the bear divs are confirmed on NAMI, and I would say money flow is relatively flat in here. Let's do this. Let's pull a Fibonacci from these highs, the second rejection, not the overall highs, but to the lows. And I want to look at our wave 4 targets. Yeah, it's right where that 0.5 Fibonacci is as well, guys. Hold on, I want to check something else. Okay, looks like we probably hit the golden pocket. Let me see here. No, not quite. Because we could look at this as now, this being a wave 1 and this being a wave 2, your wave 2 retraced all the way up past the 886 Fibonacci. So that's very unlikely. Not a hard invalidation though. So you still could count this as a wave 1, wave 2, wave 3, wave 4, wave 5. And now that this is over, you're going to see a 3-wave corrective move up to your golden pocket before potentially coming back down again. It's not the cleanest looking. I really kind of don't like the way it looks there. And I would just really be looking at the price, the volume since the high was made. I would be looking at this kind of sideways range in here. We're back inside the value area low. So that's a good sign that we're back inside the value area low. Let's see right now on Solana, because we are rejecting from that naked daily point of control that we just hit. Let's see if it's just a small rejection to bounce from the value area low. And then if we can get back above it, I think we would continue up to your naked daily at 147-ish. Let's do this as well. Let me just get rid of this for a second. And let's pull our fib from the highs to the lows. Turn on our 786. So your 786 Fibonacci is going to be right where that naked daily point of control is. And remember, if all of this, 1, 2, 3, 4, 5, and then we're going to do a bigger 3-wave corrective move here. Between the golden pocket, the 786, especially for altcoins, they oftentimes will go to the 786. So you still could put in a lower high around 147 before coming down in a wave C, and that would be another impulse to the downside. And it is kind of likely that we are going to form that sideways range over the weekend, so maybe a move up to 147. And if you guys missed the big short from the golden pocket at 148, this would be an area where I would be interested in looking for a short at 147. But because of our larger structure, we might make one more high. So I would attempt the short from here with my stop above wherever it wicked to. You know, say we go like this, wick up a little bit, and then start to lose it. Hold on, let me clean this up first. Let's say we do come up here, wick above it just a little bit, hit that naked daily, and then I would short as soon as we started to reject from that area. I would short, my stop would go above that local high, and then I would be looking, you know, I'd really be holding this open because we could come all the way down to 124, 123. So that would be my ultimate TP on that. But I will also let myself, if I do get stopped out on this, sure, okay, cool, I lost the trade. I would look for the next one where you make one more 5-wave impulse coming up to around 150, and I would look to re-enter a new short in this general area to look to take down. But Solana is at a pretty key resistance as well on the daily time frame. Now, you can see we're pretty much right at that POC right now. Let me turn off these naked dailies. And we're looking at this sideways range between the value area low and the POC. And I want to see this range continue because I would like to see accumulation happen here. We are crossing over into the green on the daily, but our momentum waves topped out. We did see bear divs confirmed. So it would be really nice to drop to like 123, 124 before ultimately getting a potential huge long opportunity. Okay. Win the Discord, Travi Trades. It's honestly, probably not going to be for at least another month. I'm trying to learn more about how to use it and also like how to set it up through PayPal or Venmo or whatever I'm going to do with it. So I'm still learning that process, guys. Missed that move on Solana right now because I was my levels on Bybit. Don't have that actual naked daily point of control. Okay, yeah. Luciano, I'm telling you, man, I've been in a debate with Jason because Jason is a highly respected trader that I love. He swears on Bybit prices. And he watches Bybit volume levels and Bybit naked dailies. But I've tried to show him over the years that Coinbase, as far as volume levels go, naked dailies, those things, Coinbase does tend to be more respected. Another trader that I love that I consider a good trader and a friend of mine is Andy from Bitcoin Consensus. And Andy used to use the Bybit chart too, but just recently he started switching over to the Coinbase charts and looking at the Coinbase volume levels. And he said it actually the other day in one of his live streams. No, I've been looking at Coinbase volume levels because they're respected more. And I was like, whoa, Andy, finally, you know. Coons, another great trader. He uses Coinbase charts as well. Just, you know, I know there's I guess it's whatever you believe in. And I guess if you're trading on Bybit, you should probably be using Bybit chart. I'm not trading on Coinbase. I'm not trading on Bybit either, but I'm still going to look at the Coinbase chart because Coinbase is also a spot exchange. It's the largest spot exchange in the United States, which is the biggest economy in the world. So for me, it just makes sense that you would go with Coinbase, but to each his to own. Did we just head and shoulders of BTC on the daily? I wouldn't call this a head and shoulders on the daily. See, I'm on the daily right now. And if anything, you could say if we're going to top out, you have your kind of left shoulder here. This could be your head where we then could drop all the way back to the bottom of the channel, bounce from the bottom of the channel, grab some local liquidity around 90K, and then we could come up and make a lower high and then create a head and shoulders, like a left shoulder, a head, right shoulder, and then break the channel down. That would be your breakdown of the head and shoulders. But for now, I would say it's not a complete on the daily time frame. I don't know how you'd be looking at that. I'm trying to find the head and shoulders here, but I just don't see it. Oh, I see what you mean. A much larger left shoulder, head, right shoulder. I would say you're a little bit low for a right shoulder here. Okay, because look at your other highs came up to about 109, 108, 109. And you want some symmetry to be in there. So not even at 100K, it's a pretty much 10K less. We're at 99, not even 99. We're at 98 instead of 109 or 108. So if it is going to be a head and shoulders, that still could be a probability. If we break above this POC, flip it, you might work your way up to the value area high, which is also where these highs are. So that could give you that rejection on a lower high, and then you could. But if you're going to break this huge head and shoulders structure down, let me see here. I'm just going to zoom out a little bit so we can get it better. I'm going to go to the 3-day time frame. And let me hide our range. So if we are going to get that head and shoulders that's going to play out, I would want to see that rise to the value area high to around the same level, kind of chop in here range. And then, but like, imagine if that's going to be a bigger topping reversal pattern. I mean, we do have monthly bear divs. We do have triple drive of weekly bear divs. You would want to see, and another thing with head and shoulders, by the way, is generally you want to come down and break your left shoulder low, making that bearish break in market structure. Because if you break the low first, and then you're likely to make a lower high. So we'd want to still come down and break this low and then make a lower high. But let's just do this little experiment here. Let's just go from the head to around the neckline. Let's see, we could even put it to the candle closes right here at like 78K. And then let's bring that. Let me just throw that here. We'll bring this and put it on the drop. Yeah, 49K. I mean, actually, it's very interesting. It would be a liquidity grab of this low. And if I go to my larger chart, let's see, which one was it? Index chart. Where's my index chart? Here we go. Index chart. If we are, and look at as far as the head and shoulders goes too, so left shoulder, head, if we do come up to the top of the channel, right shoulder, and then we break this thing down, your breakdown target is taking out these lows. It does kind of make sense that that could be the bear market bottom. So I would say not quite yet. I would say this isn't adequate enough to be a right shoulder. If it is, it's a very wonky one. But we also didn't get the bearish break in market structure yet, which would help that. Help make that more of a reality or possibility. Yeah, Travi Trades, you do match your chart to your exchange. Well, good, man. Good for you. What I do, so here's what I do, guys. You see I have multiple Bitcoin charts right here. I chart on all of them. So my main chart that I'm looking at is Coinbase, excuse me. But I'm also going to switch over to the Bybit chart, and I'm going to pay attention to the Bybit POC, to the Bybit anchored VWAP, and just you kind of got to play it subjectively. Like as you're looking at the charts, like, okay, hey, we're coming up to the Coinbase level. then you can go switch over to the Bybit chart, see how close or far away you are from it, and just kind of gauge it. It's really on a trade to trade basis though. But for me overall, I would say Coinbase for me is the chart personally. So Jay is old school, started trading before ETF. Now Coinbase being used for U.S. purchase. Yeah, that's another thing. Coinbase is used for all the purchases of BlackRock and all the purchases of the U.S. So it is definitely more accurate, in my opinion. Awesome, Tony C. On my altcoins too, you can see on Ethereum, I have two charts. Coinbase chart is the first chart. I use that more. Then I have the second chart is Bybit, of course. Bybit perpetuals. Yeah, guys, it's interesting on this pitchfork. We keep rejecting the midline. Rejection from midline, wick above, failed auction above, fall below it, back test it. I would just say Ethereum is breaking out of that value area high. So we would have to see, and you could even pull this range back to like all the price action underneath the pitchfork midline. It doesn't really change anything. You could see it doesn't really change anything. But I'd be watching for a back test of around $3,200, $3,212 to $3,210. If we back test this and hold it, then we might at least see another high attempt to be made. Okay. Guys, give me just 1 second. I got to answer this text message. Give me just 1 second. Okay, guys. I have to take off in about 15 minutes here. So I am going to have to cut the stream a little bit short. Usually I like to go at least 2 hours, but I am going to have to cut the stream a little bit short today. So if you guys want me to look at any coins for you guys, just post them in the chat. We'll take a quick look at them. But I'm sorry, I do have to cut the stream a little bit short today. Okay, let me see. Jonathan, what are you saying here? Did we just... Okay, wait. I'm on the 3 minute. Oh, you're on the 3 minute chart for Bitcoin. You're talking about a head and shoulders on the 3 minute chart for Bitcoin? I would still classify it. You're looking at this local, like left shoulder, head. I would still want to come up a little bit more for right shoulder here. But also remember, head and shoulders is a topping reversal pattern. So you're looking at that pattern in the wrong area. In a topping reversal pattern, we've been in a downtrend for 2 days now. So you're not going to want to be looking for a head and shoulders at the support level. We're pretty much at support right now. You want to be looking for head and shoulders at highs, and you also want to be seeing if you see some bear divs there. Now at lows, you want to be looking for that inverse head and shoulders pattern because it's a bottoming reversal pattern. So that is one mistake a lot of people make. And I'm not saying, by the way, you're making this mistake. I'm just pointing this out to everyone in general. You often want to look for these more, whether you call them pattern trades at certain levels. Like I know a lot of people, let's just say Bitcoin, has been dropping for a week. And then we're starting to bottom out here and it's forming a range down here. And then they see this head and shoulders pattern. And they're like, oh, look at left shoulder ahead, right shoulder. And we're going to break down. And then you'll just come grab the liquidity of the lows and reverse here. it's far more likely to see a head and shoulders after a pump or an inverse head and shoulders after a dump. You want to see that inverse head and shoulder come in, liquidity grab, higher low, break up, you know? So just pay attention to where you're looking at the patterns as well, I would say. Okay, ETH also has that macro value area high naked daily point of control in, I think you mean golden pocket, nice area to look. Ethereum, so what I'm looking at for Ethereum, guys, is now at least, I don't know which macro value area high you're watching, is if you're looking at this value area high at 3,200, or if you're looking at the value area high of your 4-year long range. So on our huge range that goes back 4 years to May of 2021. So this whole upper price action for the last 4 years, the value area high on Coinbase is around 35.75, 35.70. Now, yes, on Bybit, you can see it is at 31.30-ish, right? Where the POC of our smaller range is. So big difference there. But for me, I'm looking at this. Pretty much we came down, we rejected, and this pitchfork has been really, if you guys have been following my channel for some time, you can see that this pitchfork has been really well respected. Let me zoom in onto the daily. So we bounced from the macro value area low. By the way, if we turn on that 4-year long range, you'll see our $1,400 support level was our value area low of the range, almost to the dollar, right? So we bounce from the value area low. We get above the POC at 1,500, 1,550. And you can see what happened here. We broke above, flipped the POC to support for like a week and a half. We pushed up and we ranged for about 2 weeks inside the pitchfork band. I talk about this a lot on the channel, guys, but you often form ranges in or around pitchfork bands. So we formed a range inside the pitchfork band for a couple weeks. We broke up, and then we broke up all the way up to above our pitchfork midline, and we chopped around kind of in and above it for 2 months almost. We broke it down. We bearishly backtested it. We came to the anchored VWAP. We held it. So now we break above, and we pretty much break all the way up above our upper band. And you can see here when we broke above it, back tested the top of it, it held, so we made a new local high. But after making a new local high, we broke to the bottom of the band. We held it, and now we go up and we test the top of the pitchfork. You can see this was our distribution range in here, right? And what happened here is we broke above, but we didn't take the liquidity of the all-time high. Let me just throw that on there. So we didn't take the liquidity on this high of the all-time high. We had front run the all-time high just barely. So what happens is we make a higher low, and then we finally grab the liquidity from the all-time high. After grabbing liquidity, we make another lower. We didn't make a lower low, but we continued ranging sideways. We made a lower high. And then that is when you kind of had this small distribution pattern, or this is a place to look for a head and shoulders right at the top of a pump. Left shoulder, head, right shoulder, breaks down, and then we get after breaking market structure bearishly, we broke the lows of the range, breaking market structure bearishly. So now we can look for a lower high before possibly putting in a lower low. And that's exactly what happens. We make a lower high into the pitchfork top again. And then October 10th happens. We crash directly to the bottom of the upper band. You can see there, crashed, found support at the bottom of the upper band. But our daily candle closes for about 2-3 weeks. We were holding the band as support, wicking past it, but overall holding our daily candle closes above the pitchfork band. It's only when we started closing below that we flushed all the way down, and we flushed down to that 50-week moving average. But you can see here, bearishly backtested that pitchfork band. Now it was what was acting as support here, you lose it, and then you bearishly backtest it as resistance. We shorted that in at least I should say I shorted it. We were looking for shorts in the community, and I did short this here because it was also the back test of our value area high, of the Coinbase 4-year long range value area high. But we drop, fall to the midline, bounce, midline, bounce, and now we're kind of just working our way up. And I do think we could come up to 3,600 again, 36 to 3,700. If we do come up here, I will be looking to short this area for sure. But we're just chopping and ranging. So I'm looking at this ranging structure in here. This ranging structure. And so that's what we've been. Now we can zoom in onto the 4-hour chart. And we can turn that range back on. Let's see. Did I delete it? Looks like I did. All right. Kind of that rangy structure in here. And we're above the value area high of the range. So if we kind of grind sideways and down like this with low volume, we might see that back test of the value area high. One thing I will say, even here, this was at the top of a pump, right? We pumped up for the last week or so, but look at the top of the pump. What do you see? Left shoulder, head, right shoulder type of thing. I wouldn't quite like to classify that as head and shoulders because we're not breaking it down really. We're just kind of grinding down. This could be some sort of contracting diagonal that we're seeing right now. And we might continue in this contracting diagonal throughout the weekend until we backtest that value area high and then continue. Okay, wait. I have to go faster here. I've only got 5 minutes left. And guys, I'm really sorry about having to leave early. Ave, RVN, Phil, Sky. Shoot, I will not be able to get to all those today. And Jupiter. Let me see here. I want to check Filecoin real quick. And we'll go over these on more macro timeframes. Filecoin, we were looking in this bigger descending channel. Since the big crash, we've been looking at this descending channel. Let me just pull this. We broke down. We came all the way up and grabbed the liquidity from the highs of the channel. And remember, I remember someone was asking me right after we grabbed the highs on that pump. I said, be careful because we just took out the highs of this liquidity trail and we could drop all the way back down. So we did. And we didn't even hold this box of support. We tried to, but didn't. We are grinding right around the POC and the bottom of the channel. So we're trying to re-enter the channel. Grab the highs, had a failed breakout, fell back down, bearishly backtested, came down to the value area low. We're holding the value area low. This could be a double 1-2, a 1-2, 1-2, 3, 4, 5. So now we would need one more 4 and one more 5 in here. I would say we're at your POC and we're at the channel. We're trying to re-enter the channel. This is a decent support because we are above it and we're kind of holding it, but we did reject the midline of the channel. We do have daily bear divs. Be careful here. Daily bear divs, money flow starting to come out again. Money flow's topped out. Daily bear divs confirmed. So be careful because we could lose this and come all the way back down. So I would be looking at pulling your golden pocket from the lows to the highs. Let's turn on both the golden pocket and the 786. That is a 70% move to the upside, so no log scale. So we're holding around the golden pocket. That's not a proper 61% though. Let me see. I'm just going to put it on log scale for a second to see. Man, coming down to like 142 would be nice. You could grab those little lows into this golden pocket. It's also kind of an important support resistance flip. You can see here. Little support resistance flip. It was resistance. Now it could turn into support. But you do have the daily bear divs. Let's go to the 4-hour real quick. Do we have 4-hour? 4-hour money flow is draining, about to cross into the red on NAMI and is already draining into the red on Market Cipher B. I would be, if you're looking at trading this, I would just look at this sideways range right in here. So pull a volume profile, look at this sideways range. Yeah, value area low is interesting, but I would still rather take out those lows, those range lows in here. 1, 2, 1, 2, 3, 4, 5. So you might get one more high even still. Looking at this as a double 1, 2 impulse. 1, 2, 1, 2, 3, 4, 5. Now we would need one more 4. And this 4, oftentimes your lower degree wave 4 will pull back to the lows of your higher degree wave 4. So this is your higher degree wave 4 in here. Sometimes you do take out the lows of your higher degree wave 4 before making one more 5. So yeah, 142 to 140 could be a good long. I would want to see the confirmed swing failure pattern before I longed. Okay, let's see here. Ave. Okay, Avi is trying to flip that pitchfork band to support. So you can see on this pitchfork, held the band here, left shoulder maybe, head. If we push up, because we're trying to flip this band to support, if we push up and reject from the pitchfork midline again, and then come down and make another right shoulder, that could be your kind of accumulation range that's starting in here. Accumulation. It doesn't look near as bad on the bear divs on the daily. You do have them on NAMI though. Bear divs on the daily here. I would potentially look for a pullback to backtest this pitchfork band because you haven't backtested it since you've broken above it. Let's zoom in here onto the 4. I would be looking at the range here. And then you could even pull the entire bottom price action. Like all the price action that's underneath the pitchfork. Yeah, see where that value area low is coming in? Right there. That would be nice because you busted back inside the volume profile. So because we found reacceptance back inside the volume profile, we're chopping around POC, chopping around, break up, take the liquidity of your local highs. Now if we come down to value area low again, grab these local lows down here. So what is that, 160-ish? And then let's pull. Yeah, I would say 157, 156 actually, because you could wick past it a little bit. In this general area is where I would consider some support between 160 and 157. Okay. Oh gosh, guys, I'm really sorry, guys, but I do have to get going. I will check some more in the next live stream. Like Ronald, I couldn't get to Raven and ABE C9B. I'll check Sky out in the next live stream. If you guys post these again, I will get to them. And Olga Viana, I will look at Jupe next time too. So really sorry I have to go, guys, but we're going into the weekend. Expect some rangy type price action. Bitcoin is getting that little scalp long opportunity from the lows that we had yesterday, from the support level we had yesterday. If we break above the VWAP, that's going to be bullish. If we start to reject the VWAP again, I think this is going to continue to break down. But I would be pulling a channel from the highs to the lower high to the first low down here and follow this channel. Because if you start to break the channel to the upside, it's likely that you do come up at least and hit 96.6 where that liquidity is. 96.6, you see. So just pay attention to that, and I'll post in the Telegram some updates if I can, guys. But have a good weekend. Stay safe out there. Please hit the like button on your way out, guys. If you got